Breaking news here on Martyn Lucas Investor on Golden Day, all part of a playlist series of gold videos today. Very excited, and I'm going to share with you some further information. There's a half a dozen videos here, all in a series of all the things you need to know today on Golden Day. First time in 4 years we've had rate cuts. So a lot of information is being shared over several videos. This is video number 2. We just talked about FOMO. We're now going to talk about we'll talk about cheap money. So if you're not, if you want to go and check out the whole series, there's several videos. You might want to go and check out the rest. Have a little look. But right now we're going to go into cheap money. Now then, some mega news. Rates last night came down 0.5%. Great. The federal funds rate came down 0.5%. Now that doesn't mean to say everybody benefits from it. You only benefit from it if then the institutions, the banks, the brokerages, whoever, pass on those rates to you. Remember, banks are businesses. They're not a service. They used to be years ago, but they're now businesses. They provide a service and they make money for doing it. For themselves, a business. So unless they pass on the rate cuts, it doesn't benefit you. So let's talk about what's happened this morning with rates and margin. Very, very important. And let's focus on Robinhood. Last night, I was notified on Robinhood that they had reduced the rates for uninvested cash. In other words, the money that you are earning on your uninvested cash, the money that sat in your buying power, has gone down by 0.5%. What does that mean? The money that you hold in cash is not earning as much money today as it was yesterday. Now, there's lots of implications for this. It went down by 0.5%. That's a big, big change overnight, a big drop. 0.5% is a lot. So your money is earning a lot less than it was yesterday, as of today, as of the opening bell this morning. Now then, they didn't have to do this, but they have. They've also reduced margin. And let me explain this, right? By reducing the rate that you're going to earn on your uninvested cash, so you're now earning less on your cash sitting there, means more people are going to start to get in the stock market. And it's going to be coming down month by month. Every month now for the next 6 to 12 months, we're going to have rate cuts. 0.25, 0.25, 0.25. It's going to keep going down. People know that now. They know that uninvested cash sitting in the bank, sitting in Robinhood, is going to earn less and less and less. They're not going to wait much longer. They've already piled in. They're going to jump into this the equities and buy the stock market because of 2 reasons. One, you're not earning so much money now in your uninvested cash, and that's going to go up and up and up. Okay, the amount that you're not going to earn is going to go up because it's going to go down. Is that confusing? Sorry about that. So there's the first thing. But the second thing is we've now got cheap money. Now remember, Robinhood used to be 2%. In fact, when they first came out, they were 0% for margin. It sent the markets crazy for a while, but they were 2% after the craziness, and we could be going back down there again, which gives free money. Not free money, but people will regard 2% as free money. It's not, but people will see it that way and pile on in. Now remember, Robinhood do not have to lower their rates. They could say, you know what, we are charging our customers a lot less than Schwab and everybody else, and they're nearly half. They could say, we don't have to lower our rates. We could just leave it as it is. But they decided to do it. Good for them. Great customer service. People, a lot of people go, oh, I hate Robinhood, but actually they've done a great service there. They didn't have to do that. They've taken away the uninvested cash because that would cost them money. But so that was always going to happen. But to lower margin, they could have left it where it was and said, well, we're still providing the best service. We're going to leave where it is and made a lot of money. They didn't. Now, the benefits to you is you're now paying less to borrow money to buy the stock. So you've got a big discount today, 0.5% discount on your long-term investing. Very nice indeed. What does that mean? More people are going to buy. More people are going to invest. Robinhood is going to go up. More people are going to use a brokerage. It's a massive influx now of money coming in. Let me share with you the buying power, exactly what's happened here. Here's my buying power. There you go. You can see how much money I'm borrowing. You can see it's come down quite a bit from the peak. It was nearly $10,000 higher than this a few months ago. It's come down quite a bit, and it's about to come down another couple of $1,000 on the 21st. It will be the 23rd this month because it's a weekend, so I'll get paid a couple of days later on YouTube. But come next week, I'll be reducing this down by another couple of grand, maybe slightly more if I'm lucky. We'll see. But if we scroll down here, you will see that I'm 52% now. 50% is my margin safe zone. Well, not really safe zone, but that's my own personal level I don't borrow over. I'm 52, it's gone up. But if you look at the details, if we scroll here, you will see that overnight interest has come down. Can we show you there? Look, 6.05. 6.05. It was 6. I'm going to, in fact, try to find a better screen to give you that, so I don't have to keep doing that over and over again. Can I do it this way? There is that better? That's a slightly better. Okay, there you go. 6.05. So my daily interest is going to drop. It doesn't show it now. It will show it tomorrow. 14.23. It's probably going to be like $14 now. Maybe even 13 something, and then come Monday when I get paid, it will go down to maybe 12 something. It's going to come down quite dramatically. But if you look at view all the rates, if I click this button here, view all rates, you will see how the margin is coming down. See, I'm on the second tier. 50 grand or more, 6.05. Can you see that? So it's dropping. And if I spent 100 grand on margin, it would go down to 5.75. You can see how it's coming down. So this is great. Now, what does this mean? This means that more people are going to get involved in the markets. More people are going to buy. They're going to go, no point my money sitting on the sidelines. I want to get invested. I want to be invested. Now, here's the warning. As great as this is, as confident as I am that I'm going to $1 million, as confident as I am and excited and happy as I am with my portfolio, that isn't right for everyone. Because let me explain. What's going to happen is this. More and more people in their millions, billions of dollars and trillions of dollars is going to flood into the market now. Because we all know that interest payments on your uninvested cash is going to plummet very, very quickly. It's going to come down very, very quickly. What if we get another 0.5%? We could, and then we're down to 1% like in a couple of months. So people are going to buy the market. Now, if you are buying the market now, and you are buying it with margin now, you are going all in. Be careful, because even though this is bullish, and even though the markets are going to 3x, my S&P is going to 3x by the end of the decade, no issue at all. If you have gone all in and you've spent more money than you can really afford, and you've used money from your mortgage because you've got FOMO from my first video, I just did the part one was FOMO. You've over leveraged, you've borrowed too much. Even though the markets are going to go up, there could be a sell-off, a trim-off. Why wouldn't there be? Why wouldn't there be? I mean, there might not be, but there could. And if you've gone right in on a margin and you've leveraged right up, you could get margin called. So be very, very careful. Now, if you want to know how margin works, I've made a full margin call video, because it's important to note that just because you hit a margin maintenance line, you don't get margin called straight away. I think Meet Kevin made a ridiculous statement once when he said you can get, be bankrupt with margin, all the rest of it. It's not how it works. If you watch what you do and you understand how it works, you don't just wake up one morning and you're bankrupt. That was just a good video for him to sell videos and scare everybody, and it's rubbish. It's not how it works. You might just get a margin call for $1 and go back up again. Makes a difference. But just bearing in mind, if you are jumping in now and you are using free money, because everyone's going to be using free money now, you could get margin called, and then you could end up selling because out of fear, because you don't understand what's going on. So just be very careful. This is very, very bullish, fantastic. Rates have come down, great for borrowers, great for investors, great for the markets. Everyone's going to pile in free money. It's going to get cheaper and cheaper, but you should already be invested, right? So this is my interest rates margin video now. It's part of a little series of videos I'm making on gold day. Click above my head for the playlist, as I'm going to make about 5 or 6 videos. Down below in the description over here, I'll put the playlist, the gold playlist for all the videos in today's event. It's a big day today, big gold day. And down here, the psychology of investing, what you really need to think about with the psychology of investing. All right, so go and check that out. So now we're going to go on our next video, talk about some individual stocks and some prices and where we think things are going. And there's more besides that. Until next time, as always, take care of yourselves and each other.